Welcome back to another episode of Gold Breakdown Streams. Hope everyone's been having a good day. Maui, Kurt, Jabba, Connor, yo, join up. Cool. Welcome back, guys. Welcome. Yo, Tom, how you doing? Yeah, just gonna wait a couple minutes. Gonna get a couple more people joining in, then we'll get started on this breakdown, yeah? Yo, skirt. Yeah, I'm doing good. Had work today, so no trading for me, unfortunately, but it's alright. Don't think I would have caught anything anyways, because I think based on the analysis yesterday, right, like just looking at this, I was looking for a break of structure here. I think it closed well on the hourly. I was looking. Yeah, you closed below, right? Below once and then below with the bottom wick the second time. So I was looking for these sells here, but he didn't tap, so don't think I would have caught anything. But that's all good. Did you guys catch anything for New York? Oh, we have about 45 seconds before we're gonna take a 1 minute scalp. My G. I love good 1 minute scalp. What time frame was it based on? Was it based on the 1 minute though? If it was based on the 1 minute, man, that's dangerous. Because that's what I used to do. Cool. Yeah, nothing look clean, right? Yeah, I think we're gonna start. So it's exactly 10:30 now, right? So let's remove everything. Actually, let's look at what the analysis was yesterday. You know, we broke down that price faked out here on the 30-minute and the hourly. It's a 4-hour bottom wick. I'm just gonna push, right? It's not gonna retest these lows, you know, because you just grab this liquidity, so it's gonna push in the direction, right? So once you've pushed, you have no bottom wicks for these candles. So it's very difficult to get an entry if you're looking for a breakout. Tapped into these sorts of areas. We were looking for these for potential sells, right? But that was going to be after a break below 1860, which happened, but it didn't tap our levels. So nothing I could have taken anyways. And the buys here, you know, I wouldn't have taken them just because, you know, you haven't grabbed that liquidity towards around these sorts of areas to come down for the sell. So any given point, right, you could have grabbed here like towards around these areas and start flipping. This could have been a huge liquidity grab. So nothing for me, all good, right? Let's remove everything. Let's go down to that. Let's go up to the monthly. Let's actually just go to the daily, right? The daily closing, basically doji. There's not much that kind of went on. Yo, bougie. Yeah, so daily basically closed doji. What does that mean for the monthly and the weekly? Basically, we're at the same levels, right? So your breakdown is still, you know, you've tapped into this range now on the monthly. You're making a decision, right? That's the monthly. Very easy. Weekly, you've closed here, respecting. So what are you going to do? You're going to grab liquidity. Where's that liquidity level? Potentially up to these sorts of areas. I'm looking at this. Oh, even potentially slightly higher, right? So even up to 1903 is a second level you could be, or towards around these sorts of areas is a potential second area of entry, right? So what I'm looking at is this wick here, right? I'm obviously looking at these here, but I would say your first level is here, these wicks, and these here. Your second level is at 1908. So daily, right? We're back down to the daily now. Daily closed bearish, but it was actually also respecting my range. Surprise, right? So because it was respecting my level, right? You could say a couple things, right? You could say that, you know, price is just currently in this range, and because it's in a range, it's going to fill. So that's what you're doing. You came up, now you're just going to fill, and you're going to do this before you break out potentially to go up, or you're going to break down potentially go down, right? So we don't know what price is going to do, but we've closed respecting the range. So at any given point, you're just going to start ranging here for Asian, right? You don't know if you're going to get a breakout or anything. So let's look on the 4 hour. Let's draw up our level on the 4. 4's looking pretty good. We're getting some structure being formed, right? Let's have a look. I mean, I would use this, but I don't think that's a clean level on that time frame. Let's have a look. So this is okay. This is also okay. Potentially, I guess you had a fake out. It's difficult to say. What is this top of this range? Let's look at that. Yes, potentially you could have said this is the top of this range. So if that is, yeah, okay, cool. I actually will have that as the top of that range. And then let's just kind of analyze this. So prices come up, right? Faked out, started coming up. Grab some more liquidity, started coming up, right? Cool. Now that you're here, right, you've created a range here. You're creating a range here. So it's bullish. We're generally bullish, right? But we're understanding that you haven't broken out of this range yet. So you're looking to grab liquidity, right? What is that liquidity in the form of? A bottom wick. So we're looking for this. This is the play we're looking for, right? For this to happen, you're going to need, you know, hopefully some level of breakout here, ideally. So, you know, potentially price doing something like this, all right, breaking out of the range, and then coming down to grab that liquidity towards these sorts of areas, anywhere between, I would say, 1852 all the way down to 1844, and then for price to push up, all right? So let's also look at some examples of when this last happened. So let's draw out some more ranges. I'm going to go down to the 1 to draw the actual ranges, because the wicks, they tell you a lot, but I still prefer having this to kind of hand. Cool. Like I can still use this on the 4, right? So last time we were coming out bullish, right? We were bullish. We're in the range 1854 to 1865. So you could say potentially something like this, right? If price were to reverse, you could potentially get a first entry here to retest a certain level. So this is why you don't hold buys all the way up here, right? Because at any given point price can reverse. So you'd basically be break even at least here at 54. And if price drives up, cool, you could have taken another 40 pips, but you're at least break even here. So if it comes back down, you're safe. Yeah. But this could be a potential first entry. So I'll be potentially looking at that on a smaller time frame to kind of identify that range. Just in terms of this, I mean, it's looking slightly dirty, I'm not gonna lie, but I'm gonna have to put it slightly higher, at around 1848. So you might get these buys here. If not, it could come down to retest these lows. What is this low, right? Let's have a look at what this low was in terms of our current price, 1825. Yeah, so if it comes all the way down to here, cool, you know, you're creating bottom wicks for these candles on the 4, right? But understanding that this is just a massive push, this was a gap, right? This wasn't the result of price moving up slowly. So if that's the case, if you come back down to here, it's not structure that's being broken, it's just, oh, you're just potentially coming bearish, you're breaking these lows, you're potentially going to start coming down. So because of that, you can't really use this as a valid price point. Let's have a look at what other times you're respecting 54 to 65. Yeah, so I mean, look at this, right? You tapped 65, or you know, you're in this range here, 65, right? You came down to grab liquidity towards here before you're able to drive back up. You were respecting generally, and you were very much on a bullish structure. So when that happened, you got these wicks, right? Got these wicks. I would say you also have these here. So this is a pretty strong level that price could reject at, right? And even just looking at this, right, you could potentially have your first entries But this, with this, right, you're getting this respecting here, you've already broken above. So you've already broken above. So what was the liquidity you needed to drive all the way up to there? Potentially your liquidity was towards these areas, right? But I'm also understanding that for me, I wouldn't be entering buys towards, I mean, I could, right? Potentially could have a first entry around here and then some pineapples at 48. We'll have to define that clearer slightly later, but I mean, we could, let's have a look for them. Let's have a look, because I know you guys are keen to get some trades because you didn't really get any today and you feel like the market owes you some money and shit like that, right? So let's search for your trades. We'll have to go into, actually, let's go back to 4 hour. I'm just going to draw out where I feel is appropriate. I'm going to look at this, right? I'm just going to highlight this. Last time you're in between this, it is not bad. Okay, I'll highlight this. I'm highlighting this just so I can then look on the lower time frame and see what the fuck is up. Looking at this, right? You start breaking above, grabbing liquidity towards these sorts of areas, right? You see this massive liquidity grab. You're respecting generally, you're looking like you're pushing up, fake out on the 4 hour, but a huge liquidity grab here, right? What else was I looking at here? I have now forgotten. Oh, this. Cool. I think that's probably enough data. So let's go to the hourly. Let's analyze these one at a time. So 54, 65. Just reminding ourselves what the range it is. I had some stuff here as well. So what was this? So you broke above. All right, you broke above. Tapping this, you'd only take a small bit of the move. You wouldn't look for this to retest the highs. With this though, you're looking for this rejection up to here, but again, you would be at least break even towards it. I would say even like 53 levels here. So the buys here, I'm going to mark as buys for now. Understanding that we're in this range here, right? With this, I'm understanding this could have been a fake out to test the top of these levels. So once you've tapped this, which we have, right? You've come down, grabbed liquidity towards around these levels before going back up. Cool. Let's look at what this box was showing us. You're in this range. You've come down. Potentially, we can get an entry here. So I'm going to highlight this as well, 51. Let's look at, ooh, I don't have enough candles. Piece of shit. Anyways, that's fine. Let's look at the 4 hour for that one, which is, I think, this. So, because we can kind of look at the higher time frame candles, but also break that down to see what's kind of happening on the lower time frame, right? If you had a buy here, what is this in terms of a drawdown? 70 pips, pretty chill, man. Like, I would say honestly, your stop loss is at least going to be below these wicks, but you're gonna have to see what it looks like in the current price point. So I'm gonna put this line here for now, but I'm understanding that you're in this range, right? Ideally, you potentially get this entry here, right? So I'm looking for this entry. Oops, this entry here, right? The buys here initially to test here. Once you start breaking below, it's difficult to take another trade, right? Sure, you close back into this range, but what's to say this isn't a liquidity grab to start pushing down, which you did. You broke all the lows, right? So this move, I probably wouldn't have caught myself. But I would have caught this move. I would have caught from here. Break even right here at 54, right? Honestly, I would have closed full. This is 30 pips. I would have closed full. My stop loss would have been at these lows, potentially down here, like 130 pips. So what's your R? 0.22. I love it, right? That's exactly what I want. So that's the kind of trade we're looking for. So what does 1842 look like for R? It's not bad, right? It's not bad because I'm understanding that if price starts breaking below here, let's look at what it looks like on the hourly. I'll probably have it below this range, so I'll probably move this down to around here. So if I were to get into a position, say around here, let's say price starts breaking above, or it's like, it's looking, it hasn't filled the complete range yet, but it's respecting here and it's creating these smaller wicks. I'm going to look for a wick that breaks all of that. Potentially have a stop loss towards around these sorts of areas. Like, you can probably put it like around here for 130 pips, right? And then you could probably look to put a target here for now. I know this is a 1 to 0. No, 1 to 1.1, right? You guys, are more happy about that, but I would basically take full profits at 30 pips here, because it'd be good if you guys could explain why, because I've been explaining it to you guys every single day, right? But this is what we're looking for, right? You've pushed up, coming down, right? You're doing this, you're just ranging around, right? So if you start doing this, closure above, you broke all the lows, right? You've broken all the lows, you've come down to here. What's to say price is not going to do this, right? If this is what it's going to do, I'm at least break even here. So if it comes back down to here, I'm at break even, right? But if it starts deciding to go back up, cool, I'm still at break even, right? And I'm just going to let it run. And those are the runners we potentially will be catching. It's cool, those are my buys. And it kind of makes sense with what price is printing now in terms of structure, right? You have yourself kind of like a range 1, range 2 here, I would say. Maybe around here, right? So you have like a range 1, range 2. So when price breaks into, price breaks into this range, does this, right? Goes up. We typically come down, break some lows, break these lows or break these lows to grab the liquidity before going up. Taking the buys here, dangerous, right? Dangerous, why? Because you haven't created that higher high. If you were to break these highs, this, right? Cool, I'll be looking for some entries here, because I'm understanding that it will grab liquidity, but for price to then come down, break all these lows, could be an indication that you're driving down, right? And instead, I'll be looking for the buys here, because I know this could be enough liquidity for it to drive all the way back up. Does that make sense? That's a difference between the closure above and the no closure above, but respecting and you're in the range. So with this, I probably need like, let's redraw this one so it's kind of more specific. So this up to here, I would need like this to be formed, all right? And probably like a slight break like this and then this. Specifically, I would be looking for something like that. Yeah, cool. Those are my buy levels. Let's look at sells. Yeah, makes sense. Raise, nice. Let's see, hourly. 4 hourlies of this. 30-minute is. Yeah, like this. Okay, cool. Let's have a look at the 4 hour to see what price did. Oh, we're here, Jesus. Yeah, so we're in this range, right? So where did price grab liquidity before it wanted to go down? Firstly, I'm going to need some sort of bearish closures, or, understanding that price wants to start driving down, potentially a closure. You could take a Wix trade where you're looking for, this is price going up, right? You've filled this range, now you're coming back up, potentially not breaking these highs, but closing below, celery to come down. You could look to take this trade here. This is just the kind of celery back down, but in terms of liquidity, what are we looking for, right? I'm gonna go to the hourly. Hourly looks, I think, slightly better. I think actually the hourly level is not at 65. You have tapped 65, but I don't think your hourly. Sorry, I'll put it there. I do like 65. Cool. So I'm also just going back to the areas that I'm interested in, right? So these sorts of areas, right? Understanding that if we're very bullish, I'm looking at where price tapped before it came down. You could be looking for those initial rejections around these areas, right? Even if you got into position here, you'd be in how much profit, right? Let's have a look. Got a position here. This is 50 pips, brother, right? I am going to be out at 20. I'm not going to be risking that, right? So this could be a potential position. If it starts pushing up, I will not get into another trade, right? Just because if it starts pushing down, rejecting, it's coming up, creating higher highs, not creating a lower low, no bottom wick, all the way back up, it's difficult. You could have said this had no top wick, so it potentially was the beginning of a fake out, but how do you know, right? You're also closing bullish, respecting the next range up, so it's difficult to take a sell if it retests. But that first test of this range, the trampoline, right? I'm talking about the trampoline, guys. I will be looking for, oh, a beautiful trampoline here, right? Look at this brother trampoline here. Take a sell here. Oh, that's beautiful. Let's have a look how many pips you would take. A trampoline is not a runner. Trampoline is a quick rejection. Sometimes there are larger ranges, sometimes there are smaller ranges. But this happens to be 60 pips. I'm not the judge of that, right? Price is going to tell me exactly how much I'm going to make. I don't come to the charts expecting price to give me a certain amount. Look at this. Oh, trampoline here. Pretty good, right? A straight up rejection to start coming down. Probably would have survived runners as well if you had your stop loss here, break even towards around these areas. If it didn't flip or if it created that top wick first, that would have been ideal. Let's have a look at what this is, because this is 40 pips away. Can we potentially get into another trade or a pineapple at those levels? So sells here, this is very valid, guys. This is very valid. I would say potentially you could get a pineapple about 30 pips away. What does that look like? It's going to need to be the top of this range for me. And by the top of this range, I mean this range. And what does that look like? Cool. So that would be my pineapple. Why? Because I'm understanding that if it breaks up, it could continue to fill the range. And once it fills the range, I'll then look for that rejection. And if I'm in two positions, right? Say I'm in a position here. Why is this so big? Jesus. Okay, let's just say this is the position, right? Let's say you want to attempt some runners, so you did this, but it's in drawdown, so you've entered a second position here. Let's see what your stop would be actually. So previously your stop, put it here for now. What is the top of this range? Don't know, not clear. So let's go to the next price point where we have some data. You can't take this as a stop because that's way too high, I think. Yep, way too high. Potentially these sorts of areas, maybe. What is that in terms of a stop? Yeah, probably around here. Let's calculate that. 120. Do I have enough? I do not have candles. But just looking at price overall, right? Probably put it slightly above, like just above these wicks here. That's a relatively safer stop, I would say. And if it does get to that price point, cool. Then it's it's likely that we'll hit stops, and that'll just be it, right? But once you're in a pineapple, it's a high chance that you'll reject off this level, right? And if you're going to reject off this level, it's going to reject at least, I would almost say at least to here before it needs liquidity to drive up, because what it's going to do, it's going to come up, right? Let's say you got into a sell here, right? Oh shit, it's in drawdown, right? You might get a top wick, and then you'd probably fill the range to start coming up, because that's just market structure, right? You don't see price just start doing this, right? Like this very rarely happens unless you had a massive liquidity grab here, right, to supplement that move. But that's why I would say generally that's what I'm looking for in terms of my sells. Stop loss towards around these sorts of areas. Stop loss for this one is around what was it, 38? Yeah, that's the analysis for the night. Let's go over some questions. 28 of you guys here. Welcome. Yeah, that was 20 minutes already. Jesus. Yeah. Alright, let's have a look. I make the breakdown sound so simple. It's because it makes sense to me, right? Like it makes sense to me to a degree where I can just say what I'm thinking. I don't even like think about, oh, okay, I need to consider this in my breakdown, or I need to think about this in my breakdown, because for me, it's just, what am I going to take? I'm from Hong Kong, but I'm living in London. Yeah, it makes sense. Kind of like when Don says if we're making lower lows and he targets a higher range versus liquidity. Yeah, I mean that's kind of the point where, like, if you're breaking above, then you can look for a slightly higher liquidity grab. So you don't want it to tap, well, you don't need it to tap that much lower because you're breaking above, right? That's one more confirmation that it wants to go up. So even if it broke above range 2 with a closure, you wouldn't look for buys then. I'm still anticipating a fake out because it didn't grab. Yeah, like, Connor, like, let's look at this scenario, right? It's just what looks naked to you. Like, if price is doing this, and it just does this, and it does this, like, what does this look like to you? Does this look like price? Do you see this very often? Like, a lot of the times, let's find some examples, right? Look at this, right? You pushed up, but grabbed liquidity here once. Broke all lows, grabbed liquidity again here, right? You grabbed liquidity again here. You broke above, grabbed liquidity, go up, right? Here, I guess this was enough liquidity, this was enough liquidity to drive this all the way up. But once you even got to this sort of area, to get here, you needed this liquidity, right? And then, as it was pushing down, you grabbed liquidity here to start coming down. You started to push. And then even this is liquidity grab, right? Because at some point, this candle was bearish all the way to here. It grabbed liquidity towards here for you to continue further down. So all of this is just, like, everything is liquidity grabs. And if you're gonna ever see a move that looks like this, I would be very careful, because, like, if you're getting into a buy like here, what's to say that price is just not going to grab liquidity towards these areas where your stop loss is, right? If your stop loss is there, there's a high chance that price will just grab liquidity and then start coming up. And then at this point, your emotions are going to be like, whoa, what the fuck is going on, right? That's why we started taking wick entries. Because if you're in a wick entry, your advantage point is potentially this entire range here, right? And then you can target this still. Sorry, you can, with this position, you can still target this, right? But your stops are smaller. Our stops are still like hundreds of pips, but still. Does that make sense? Motion at 1050, respecting 1853, been taking most of my scalps. The motion idea after a break of structure. Yeah, I mean, that's basically what I've been doing. But on the 1 minute, it's difficult. You need to look for, because I've been doing 1 minute scalps for ages. For like, not ages, right? For like the last like 3-4 weeks. And it works, but once you have that structure change on the higher time frame and you're still looking for it on the 1 minute, then that's when it can really fuck you, because it's going to make a higher time frame move. It's grabbing higher time frame liquidity, and that could go against you very quickly. What time frame do I take my entries on? I take it off the 1 minute. I look for entries on the 1 minute, but my structure and my setups are on the higher time frame. So when price comes to your target, do you enter on the line? You have wick entry, or do you go down to lower time frame and look for structures to be built? Depends what type of entry I'm looking for, right? If it's a fake out or like a liquidity grab, it's difficult to look for structure, right? Because a lot of the times price is going to be quite aggressive with it. You're going to have a lot of volume like this. It's going to do this up, right? And this usually is just in the form of one wick. So you're not going to see much structure here. You might get like 30-second chart structure, but like, then are you really going to be looking at 30-second chart to get that structure? Most of the time we're just looking at where these levels are going to get tapped. Once the levels get tapped, we're looking for potential positions depending on market structure, right? So let's say we're looking for sells. If price is coming up like this and it's like not doing any structure, cool, we'll get a sell if it wicks up to here. But if it slowly does this, I'm not looking for sells here anymore. I'm looking for sells potentially here, for this to come down like this, because I'm understanding that it's just slowly coming up, right? There's no volume here, so for us to come down, you need to grab liquidity to come down anyways. Does that make sense, Frederick? But yeah, that's kind of the overall understanding. Yeah, sounds good. Cool. Wow, this is a record time. 30 minutes and we're nearly done. Would you say it's better to look at the lower time frame since there hasn't been a lot of volume today? Yes and no. I would say generally your 4 hour, you have structure on the 4. You have structure on the 1. Like on the daily you don't have structure, right? Because you only have like a couple candles, but 4 hour structure is looking good. You're respecting ranges, right? It's good. So if you break ranges and you start going back up, cool, that's just liquidity grabs. It's very clean currently. That's why, like, I wouldn't say my buys or sells are very far away from price. This is like 80 pips. My sells are like 130 pips. Usually they're like really far away, right? Isn't that part of the point with liquidity graph? There's no structure being formed. If it trickles down instead of, chances are it keeps. Read this again. There's no structure being formed if it's trickling down, so you bear a structure, right? Instead, then there's structure being formed. Yeah, exactly, right? So if you're doing, if you're doing this, there's no indication price wants to break, right? If you are then looking for liquidity grab on the lower time frame, you could be looking for something like this, right? Potentially something like this. You're retesting lows, and then you grab liquidity here. At this point, you don't even know if it's going to start. This could be a liquidity grab to go up, right? At this point, this could just be a continuation to go up. Until you break this, you don't know, right? Once this is out, once this low gets broken, cool, I'll be looking for that liquidity. So this is a lower time frame, but at the same time, if price is just doing this, right, I'll have to wait for all of these confirmations before I'm able to take a sell here. But if price is doing this, right, ranging, let's say it ranges here as well, right, you break here, I have some indication here that price is going to either, you know, grab liquidity to go up, or it's going to, like, yeah, so it's either going to, this liquidity grab to go up, right, or it's going to continue going down, right? So I'm going to be looking for entries up here, because at this point, if it wants to continue going up, it's going to tap these areas before going up, and if not, this is just going to start coming down as a fake out, right? So this entry here is safe. If you see price come down to structure, if you see a doji, would you enter on a doji or wait for the dojis? So a doji candle, you have to break down what a doji candle is. Doji candle is this. So let's say you have structure being formed, right? And then from this point, say price does this. This is a doji candle. Let's say this is a 5-minute candle. Sorry. Let's say this is a 15-minute candle, each one of these lines, right? So here, you have open here, high here, low here, close here. This is a 15-minute candle, an hourly candle that looks like this. Right? If you just looked at this candle after this candle, this one came up to here, right? If you just looked at these two candles, what would you say? Would you be like, oh wow, cool, you know, you've got a top wick, let's look for those buys, right? And you potentially would be, you know, like respecting this range here. So cool, this is looking good, right? Potentially, but if you look at the smaller time frame and what price is actually doing, this could be breaking structure. So a doji candle, like, there's a lot of things you need to look out for. A doji candle, I would almost ignore, because once you ignore it, what is price going to do, right? At this point, if it wants to break up, so if it wants to break up from here, right, it's going to start doing this, right? So at this point, right, 1, 2, 3, 4, you're then opening, you might get no bottom wick, and you're going to do something like this. Cool. If that's the case, cool, we're understanding that we're breaking back up. But if you start breaking below, what is this going to look like? Right? Just draw this out in your candles, right? Open here. Right, you potentially would have a top, you potentially had a top wick, so something like that, right? So doji candle can mean a lot of different things. Just understand where the doji is closing. Look at the smaller time frame. If it's a higher time frame doji candle, look on the smaller time frame. If it's a very low, like if it's like a 5-minute doji candle, I would basically just ignore it, because it's not really doing anything. It's in its own range. But if it's a higher time frame doji candle, understand what it looks like on the smaller time frame, because it can mean a lot of different things. Yeah. Does that make sense? G88. Guess on when journal is out. What journal? I think Don has a journal that's out already. Are you talking about my journal? That's not gonna be out for a while, brother. Start journaling your trades with Don's journal for now. For your buys, you said that you want a slight break. As in, like, oh yeah. So we talked about, you know, price coming up to here, ranging here. I want this break, right? You're talking about this break. Why? Because this is just a confirmation that price is still bullish. So if I'm taking a buy entry here, I'm more confident that it's going to start coming up, because it's a higher chance that this is a liquidity grab. If it doesn't have this break, it's just one less confirmation, and I don't know if this is going to be a liquidity grab, right? This could just start doing this and then reversing. I still have relatively good confirmation that this is going to be good entry for me to retest at least to 1858, right? But that extra confirmation here gives me a lot of information about where price wants to go, right? And if this is a no top wick, then that means something opposite, right? There could potentially be no range to continue driving up. So if you start coming down, I wouldn't be looking for those buys as much. I might be looking for buys once it comes down even lower, but again, it depends on the structure, yeah? Yeah, no, I have static noise generally because my computer fan is on, so there's nothing I can do about that. And I don't think it's like unbearable, so I think you're just gonna have to live with it, because I don't think I can fix it, basically. I don't have anything else on, there's like no noise in my room besides that. Today's scalp, even though it was a 1 minute motion, on the 30-minute was motioning the opposite direction to retest the highs to come down. One more confidence, the motion just happened. Yeah, literally, motion just happens everywhere. When is the next breakdown? So GAT, do you have Don's signals, or are you in the kind of general community sort of area? And like, same for everyone. I know a lot of people who are here, but like, for the people who haven't really been here before, did you guys come from the kind of community, the general community area, or did you guys come from signals? Okay, you came from signals, right? You should know I stream every single day. I've been posting every single day. Santos comes in here every single night to say good night, bro. You should see that, right? But yeah, I stream every single day at like, I don't know what time it is for you, but 10:30 p.m. London. So half an hour before now, essentially, is your time. And I have the live streams like ready to go before, and I'm always on time. So, yeah, fair enough. Yeah, just come by. So basically, I learned from Don as well. Don is my mentor, and I trade with him. Like basically, I've traded with him since like March, and just kind of learning his theories. And now I'm just like, I understand his theories, or at least most part of it, trying to apply them to my own analysis. And I'm doing a breakdown every day to kind of go through with you guys to see if you guys understand that, to help you guys, kind of guide you guys through that journey. And at the same time, it's also helping me. It's just me transferring that knowledge in a way that helps me learn as well. So yeah, just come by the stream every day. But I think it's closer to next week or the week after. This is going to start being a paid thing. It's not going to be expensive, right? We discussed this for the new people who are here. It was actually I think we discussed it would only be like $20 a month. And that's going to be 20 analysis, right? Like every single day for 20 days a month. It's because Monday to Friday, 4 weeks, right? So it's like $1 per analysis. And that's basically just to cover my costs for stream every day, because that 1 hour out of, or 1.5 hours out of my time to set up what will be kind of like a paired buddy system. So I'll analyze all of you guys and all your trading, and kind of pair you up with somebody who potentially would be beneficial for your trading. So you keep yourselves accountable. Also, you'll be a member of kind of my group, which means that you'll have access to a Zoom, not for signals or anything, because we have signals covered, but it will give you access to ask questions live. So those questions essentially allow you to, like, if you don't understand anything, you can just ask me at any time, right? You can ask me live anytime and I can break down. If you don't understand, you continue asking. You don't just, because you've paid for it, right? Keep asking until you understand. You don't want to just stop because like, oh shit, like I don't understand, but what am I going to do about it? I'll just watch the next stream. No, you've paid for the analysis, right? You've paid $20 a month. Ask away. And I, like, kind of the idea was I wanted to do this analysis as a more interactive thing anyways. So having that Zoom is that first step towards that goal. But yeah, that will be happening potentially sometime. I don't know when that's going to be set up. Potentially next week, potentially the week after. But that will be transferring over soon, and the whole layout is going to be like the first half an hour is going to be the breakdown, first like 20-30 minutes, and after that it's just going to be the Zoom. And I'll still stream it, but you guys won't be able to ask anything, and I'll only be answering the questions on the members channel, because there's going to be so many, right? Yeah, Kurt, you're gonna bombard me, but I'm ready, right? I'm ready to learn with you guys, and see how I can help you guys. And obviously you guys will be helping me. Like if you ask me some challenging questions, I have to go back to my analysis, find the right answers to get back to you, right? So it's a win-win situation. But yeah, I think the analysis is gonna be it for today. Appreciate everybody for coming around. For my long-term supporters, you guys know who you are. And I will see you guys tomorrow. I am back trading New York tomorrow, so you'll see me on streams, you'll see me on Zoom. But I won't be trading Thursday, unfortunately. But cool. No worries, guys. I will see you guys tomorrow. Have a good one, and jump onto Wix's stream now to trade Asian. Just remember, have a stop loss, stay safe, have risk management, and have your own analysis. Yeah? Cool. See you guys.